What are you looking ahead to? Challenges and upsides.
I mean, look, there's definitely a challenge in some of the macro or geopolitical issues we're seeing. But in our opinion, you're really seeing strength on the enterprise side in terms of spending, especially areas like cloud, cybersecurity that have been robust and we continue to think are going to be robust with M&A on the horizon. And I think on the consumer names, obviously Apple, it's been a groundbreaking week or two. But I think fundamentally there's a separation, a fork in the road between some of the strong fundamental trends on the enterprise and the consumer side versus some of the headwinds that we've seen, across some of the social media names.
Caroline, we've seen a broader sell-off today, largely due to the risks in Turkey, but some parts of the tech sector actually underperformed even that. Explain.
Yeah, really in the doldrums, the likes of the chip makers. Now, this was actually coming floating. The news, the bad news for chips came from your side of the Atlantic over in the US. We saw microchips have a particularly bad set of numbers in terms of their forecasts, but notably, it was on the back of the trade tension concerns they were floating. This was about warnings that China was really reducing its orders. We've got, therefore, the trade ramping up in consideration. We saw, therefore, microchips fall about the most since the year 2000. It's down about 14%, but that really knocked over here in Europe. You saw ST Micro, you saw Infineon down. In fact, chip makers were off by about 2.4%, much more than a percentage point worse than the overall stock 600 benchmark. And we saw in the US them underperform because there was actually a note out from Goldman Sachs that took many by surprise saying, look, Intel, we're cutting to an underperform, cutting the price target. They're worried about the competitive pressures for Intel. They're worried about supporting of their margins. And so that was equally another headwind for the chip makers in particular. So I think you saw notably chip makers and also telecoms really start to underperform the market, even in the face of the geopolitical tensions that were drilling down on the rest of the market when it came to the banks, when it came to the auto sector, particularly here in Europe.
And Dan, the story of these chip makers is often tied into the story of Apple. We saw Apple break that $1 trillion mark and now sort of retesting that line. What do you think is the longer term story for Apple in particular through the rest of the year?
Sure. I mean, it's really about the trifecta product cycle on the iPhone side. I mean, if you look at the super cycle, what we saw a year ago, obviously disappointing. Now, we believe there's about 350 million iPhones that are in that window of an upgrade opportunity. Can they get 220, 230 million of that? That's the key. But China's at the epicenter there in terms of that demand trend, and that's something on the street's keeping an eye on. But it all really comes down to, from a linchpin, the software services piece. In our opinion, that continues to be a core of our bull thesis. We net valuation just of that business alone is 350 to 400 billion. Software services is the key on the growth side. Near term, the trifecta iPhone cycle, very focus of the street right now.
And I've got a chart here in my GTV library, Caroline, showing the others coming behind Apple, Amazon, Alphabet, Microsoft, all pushing towards that $1 trillion mark. And despite the fact that we are in the midst of summer, how does this play out?
Yeah, I think Apple probably is expected to test it once again. We're getting so close to that $1 trillion mark all over in the end of trading for this week, despite, as you say, lackluster trading, lackluster volumes. We still got some earnings to keeping an eye out. We'll see how Tencent in China performs and the like of Nvidia. But I think what we got to keep an eye on is just how important these tech companies are. Notably, the outperformance from Apple, which, get this, over the last 6 months, since we came off of the lows of the S&P 500 in February, since that rally, Apple alone has contributed 12% to the rally that we've seen over the last 6 months. It's borne all of that. Microsoft not far behind. I mean, they were contributing just about 8% of the rally. Amazon really outperforming as well. These companies are so important because of their huge market caps, their huge importance to the rest of the market. And I think when you look at the fan mag, as they're called now, so you've got not only the Facebook, Alphabet, Netflix, and overall as well as the Amazons and those sorts of companies, you are seeing in particular Microsoft and Apple really contributing to the overall importance of this sector and the overall heavy lifting, and Amazon in particular. I think the standouts have got to be Apple, Microsoft, Amazon in terms of the rally over the last 6 months.
And Dan, I do want to ask you about Amazon, of course, hitting another all-time high this weekend. On the flip side, Facebook, still sort of reeling after that $100 billion was wiped off its market cap. How do you expect those two stories to play out?
Well, I think, you hit on Microsoft and look at everything happening on the cloud. I mean, that's really been Nadella's golden touch, and you're seeing on the AWS side as well. There's just a massive secular shift that's going on, and that's really been a tailwind for Amazon on the AWS side, as well as just given the 100 million plus Prime members on the consumer side. Look, when you look at Facebook, you look at social media in light of privacy, GDPR, post-Cambridge, this is a pivotal fork in the road period for these social media names, and I think what you're seeing is rotation in tech as a lot of investors are looking at some of the enterprise plays in cybersecurity, cloud, big data, with some of the trends that look robust going into year end and early 19 versus social media. Definitely a lot of headwinds and black clouds on the horizon.